Hey guys, welcome back to Mortgage Matters in Minutes. This week's update on refinancing. And I just want to give it a minute or so here, just like we have last week, to welcome everyone and to remind each one of you every Tuesday at 3 p.m. We're just going to give some general updates about the industry, about different mortgage terms, talking about the mortgage and how it affects real estate, and possibly a little bit about the real estate industry. I know this week we were going to talk about some contingencies in the market, but this week we ended up getting lots and lots of phone calls about refinancing. And I thought this might be a good time and opportunity to take 3 to 5 minutes to explain the different kinds of refinances and what it may help you and allow you to do. So many of our clients this past 2 to 3 years, as interest rates have dropped, have contacted us, and we've reached out to them as well via email and text to let them know that refinancing is a good opportunity right now. The reason for that is because we're at all-time low interest rates, but another huge factor is that home prices are at all-time highs. So when we're at all-time highs, it means many clients have the most equity they've ever seen. So there's 3 different kinds of refinances that we mainly talk about with clients. And the first type of refinance that we speak to is what's called a rate term refinance. And generally what people are looking for in that is just to lower their interest rate, which would lower their payment, drop their term, which is their time frame, from maybe 30 years to a 15-year loan to get their loan paid off sooner, maybe before retirement, or just to pay out their loan quicker. Those are 2 basic scenarios that rate term makes the most amount of sense. We also, which we'll talk about here towards the end, is always analyze the loan to make sure the savings covers the closing costs. Because I know many times clients would call, have conversations with us, understanding that the closing costs might not make the most amount of sense if they're only saving $10, $15, $20 a month. Where average closing costs on a loan are usually anywhere from $2,000 to $3,000, saving $10, $20 a month isn't always the most beneficial. But if we have closing costs of say $2,000 or $3,000 and we're saving $200 to $300 a month, we can see the break even is much quicker in 10 months, 20 months, something like that. So rate term is the most common, and those get you the best type of interest rates. The second kind of refinance that we help, and we're seeing a lot of calls this last couple of weeks, is what's called a cash out refinance. And a cash out refinance comes with higher interest rates because you're pulling equity out of your home to use either to fix up your basement, fix up your kitchen, your add-on to your house, maybe use it to pay for a car or use as a down payment on a second home. But anytime we're pulling cash out of the house, we call it a cash out refinance. Or anytime we're paying off 2 mortgages, a first and a second, that would be called a cash out refinance. And so those interest rates are higher. So a lot of times when clients contact us, they do ask, hey, I want, what's the going rate today? And we have to ask, well, what are you looking to do? How much are you borrowing against the house? And last, what is your credit score? Because the credit score is going to determine what interest rate you do qualify for, whether on a refinance or a purchase. So many times we'll ask people questions, and I know it perturbs many of our clients to say, I just want to know what the going rate is. And we want to give you the going rate. We really do. It's not like we don't want to hold that back, but it is a necessity that we give you the correct quotes of what's actually going on. So many times people will know what their credit score is by following Credit Karma, and sometimes clients don't know what their credit score is. I can tell if many of our clients have contacted us before and they've always had credit in good standing. We many times just ask them to send us a copy of their mortgage statement, and we can crank out some numbers without having to pull their credit report, just to see if refinancing makes sense before we go through the full-blown application and pulling a credit report. We're still seeing many clients refinancing right now with interest rates being at nearly all-time lows. We dipped about a month or 2 months ago to the lowest we've ever seen on a consistent basis. And they're slowly ticking back up. It doesn't mean now is a bad time, because home prices every day and every month continue to rise, which allows people to take out maybe more equity or more money to pay off credit card bills or do an expansion on their house. So there's lots of different reasons clients do what's called a cash out refinance. The last type of refinance that we spend and help a lot of clients with is when individuals might be splitting up or going through a divorce. While we know that's not the most enjoyable time and it's probably a very stressful time, we then can also work with both spouses or both parties to assist with answering questions of what makes most sense for one party to possibly keep the home and the other party to possibly gain the equity out of the home to purchase a new house. And so we look at the strategies that'll help and affect all of our clients, not just one party or the other, to make sure everyone's interests are looked upon. Just like I talked about before, every refinance is going to come with closing costs. Those closing costs do affect the size of your loan. So a lot of times if clients call us and state that they only owe $150,000, and we might do a loan for 155 or 160, and people say, well, there's $10,000 in closing costs there, or $5,000 in closing costs there. And I'll reiterate to them, well, that's not all closing costs, because each time you generally do a new loan, you have to start an escrow account. You already have an escrow account, but if you're switching lenders, you would need to start a new escrow account. So that $5,000 or $10,000 in there can be closing costs and prepaids. And again, closing costs are generally only going to be anywhere between $2,000 to $3,000, or possibly even less, depends on the loan size. But I like to give people that window of $2,000 to $3,000. The rest of it is money set aside for your taxes and your insurance. So what I like to emphasize more than anything is when we are analyzing numbers for a refinance, whether it's a rate term, a cash out, or if someone is going through a separation or divorce, we like to go through all of the pros and the cons of refinancing, because it doesn't always make sense. A lot of people would assume with rates dropping, it always makes sense to refinance, and it doesn't. And I can tell you here at Mortgage Specialists, we will tell people to refinance just as often as we tell them to refinance, because it might not make financial sense in our eyes, or the numbers don't add up to be correct. So anyways, that's a little bit today about talking about refinancing, just the basics. There's a lot more that it takes to qualify when it comes to refinancing. Even though you've been making your payments, we still have to go through the process of verifying your pay, verifying your income, verifying the assets you have, the person you are with your identity. Those are the same steps that we go through if you're buying a house or refinancing, and there's just laws, unfortunately, that mandate what we have to do. So hopefully today you learned a little bit about refinancing. We're always here to help answer questions. We're going to keep continuing Mortgage Matters in Minutes over the next, hopefully, many years to come. Each Tuesday at 3 p.m. is our goal here. So if you do get a chance to come check in and listen to anything we have to say, feel free to comment, like our page, share this information to one of your friends or family or colleagues that might have questions. But feel free just to pick up the phone and call us at 402-991-5153, or you can check us out on our website at mtg-specialists.com, and we can help answer any questions there about whatever your mortgage needs for refinancing, home purchasing, maybe. So thanks again for checking in, you guys. We appreciate you all hanging out with us here on a Tuesday afternoon. Go enjoy the day and make it a great one. Thanks so much. Mortgage Specialists. Driven, trusted, reliable.